gold and oil, and I think gold and oil are ready for a rest. And I think the dollar is going to appreciate, or however you want to look at it, gold and oil are going to fall in dollar terms.
Well, again, if you go, that goes along with the recessionary times. I mean, if we are slowing down, obviously the demand for those hard goods.
In the last recession, oil went from 40 to 20, under $20 a barrel. I think we could go back to $50, $60 a barrel.
Well, if you look at the price charts right now on commodities, it's no longer in oil, or I'm sorry, commodities and oil. It's no longer parabolic. It's starting to kind of move sideways, which is obviously a sign of indecision. You got bulls and bears duking it out, and I agree with you. I think commodities are probably going to be heading low as well.
I think you had a blow off there on gold when it ran up to 940,
9,000 and almost 100 on oil.
And oil did hit 100, and it pulled. Today it's trading 86s. So I say 80 before 100. I've been saying that since it hit 100.
Right.
So.
I think over the long term, it could sell off even more than that. We could see 60, I think.
Yeah, if we go into a slow enough economic time. I agree.
So I think I think those are real possibilities, and it also when you look at wheat, corn, all the grains, also through the roof. So the world can't keep paying these prices. You've got the Beijing Olympics. You've got an election year. Things have to come in a little bit probably.
Agree.
Dave, how about you?
I think I'm pretty neutral on the market as of right now, neither bullish nor bearish. I think I'm a little bit, probably more on the bear side. So I like the SDS.
Disappointing, Dave. I like stocks here, I got to tell you.
Yeah, that's great. That's what makes the show fun, I like the SDS right now, which is the ETF that is bearish, the S&P 500. But small. I'm not outright bearish. But I think personally the better trade right now is to own some T-bills, have cash on hand, and wait for some bargains. I mean, you and I disagree probably on the timing. I happen to agree.
I'm longer term. I'm looking 12 months to 24 months out. You're looking, probably.
Yeah, I'm looking at a few weeks, week out or so. I think personally, until we get back above 12,000. Is it 12,000? Yeah, 12,700 on the Dow. I think we're going to stay sideways to down on the market. So I want to be in cash.
I'm in the same boat. I'm not overly bullish or bearish. I'm totally in that neutral range because we're today. Today we're right smack 50% between the low we just said at 1255 and the high of we hit 1575, 1590 somewhere in there on the S&P. So. Right, that sell-off that and we just hit 1,400 and then pulled back to 1,320 today. So we're right smack in the middle, and that we're at a key juncture. Are we going to go lower first?
We haven't had any more, exogenous
events
out of the financial sector.
I still think you've got banks that need to go away. There's too much excess there, and I still think public home builders have not gone under, and you need to see some of those.
They're going to see some bankruptcies there for sure.
So with those things in mind, and we talked a little bit about, I've thought we've been recessionary already for quite a while. My pick for the next few months is going to be an auto company. But again, this is where you need to take away your personal feelings about cars that you may like that they actually manufacture, and just look at the name and where we are in the cycle. I think Toyota Motors, fine company, has come up and now is battling GM for the #1 spot. Just had great earnings. The stock bounced from 90 to 110 today. I think you can sell it here 110 to 120 all day, sell it short, and come back in 6 months to a year, and I have a feeling that thing could be $50 to $70.
So you're bearish on Toyota.
I'm bearish on Toyota
That's
Motors.
A bold call.
See,
I'm going more with the emotion on that.
I would agree with the Paris trade. Buy Ford, sell Toyota. And,
absolutely. If you want to hedge some risk, I agree with that. Also, Ford's trading $5-6 range. Buy some Ford.
You don't have any directional bias. You just want
to get
narrow
somewhere in the
spread.
middle. Absolutely. Yeah, because I think there's some. That's a great call, and it's a good way to hedge yourself on that bet. I just don't think that they're going to. The car sales have been through the roof because of easy finance. That's going to go away.
Out of your house,
that's going away. That's going away, and when
that's what I'm going to do after we leave here. I'm going to pull some equity out of my house.
All right, guys. We'll be back next month with another edition of the Trading Desk, and hope to see you here next month.